Less than 24 hours after the RBI hiked the repo rate by a surprise 40 basis points, loans have already started getting costlier. ICICI Bank was the first off the block with a 40 bips hike, increasing its base lending rate to 8.10%. Bank of Baroda also increased its rates by a similar amount to 6.9%. The hike will increase EMIs for those with floating home loan rates. It will also raise the cost of borrowing for those taking fresh home, auto and personal loans. On the flip side, the rate hike will benefit those investing in FDs. Banks are always a little slow in raising their FD rates. ICICI Bank has currently done so only for deposits of over 2 crore rupees. Most banks have a base lending rate often referred to as the MCLR. My colleague Sakshi Batra explains what it is and how it impacts you.
Well, that's right. The days of low interest rates are over and loans are all set to become dearer as the RBI has raised the repo rate by 40 basis points, and this means higher EMIs for you because your loans today are linked to the MCLR. So what exactly is the MCLR? Let's begin to understand that first. MCLR is the marginal cost of fund-based lending rate, and this rate was introduced by the RBI or the Reserve Bank of India in the year 2016. It actually ensures faster transmission of rate changes, and also the MCLR is the minimum rate of interest benchmarked by a bank below which any bank cannot lend. So what is the importance of this MCLR? That's something that you must understand. Well, for one, it is linked directly to the repo rate, which is set by the RBI. Now, most banks peg loan rates to this MCLR. Any hike in the MCLR actually increases the interest rates for you. And these rates will actually rise both on the loans part and on the deposit rates as well. So while on the one hand, borrowers may feel the pinch, depositors will actually enjoy higher rate of interest. Now, which existing loans will be hit because of RBI's rate hike of the repo? Well, while all the fresh loans will start to cost more due to increased cost of borrowing for banks because of this repo rate hike, home loans with a floating rate will actually immediately feel the hit. Also, loans against property will feel immediate impact of this repo rate. However, RBI's latest announcement will actually not impact the existing borrowers of fixed rate of loans on auto loans as well as personal loans. Now, what will be the impact on your EMIs? That is something that you must understand absolutely. Say you have a 20-year home loan of say 10 lakh rupees. Now, a 20 bips hike will actually push your monthly EMI by 120 rupees. 30 bips hike will increase your EMI by 180 rupees. A 40 bips hike on this will actually lead to an increase of 240 rupees on your EMI, on your monthly EMI, and a 50 basis points hike will actually push your EMI by 310 rupees. Now, let's talk about the auto loans as well and the EMIs, how those will get impacted. Say you have a 5-year auto loan of 10 lakh rupees. Now, a 20 bips hike on the MCLR will push up your EMI by almost 100 rupees. A 30 basis points hike will actually push your EMI by 146 rupees. Another 40 basis points hike will actually lead to an increase of your EMI, monthly EMI by 194 rupees, and a 50 basis point hike will push your EMI by 242 rupees. And not just that, one should also be prepared for further rate hikes as this may not be the only rate hike that RBI will do.
If you like the video, do like, comment, share and subscribe.